All right, let's dive in. The latest numbers on Japan's real estate market are out, and honestly, they paint a fascinating picture. We're seeing a market that's being pulled in two completely different directions at the same time. So forget a simple up or down answer. The real story is way more interesting. Let's get into it.
So, what is really going on? Is the market heating up or cooling down? Well, the answer isn't that simple. It's actually a story of some pretty deep splits and contradictions, and that's what makes digging into this data so compelling.
So here's how we're going to break it all down. We'll start with the big picture, then see how public spending is playing a huge role. After that, we'll dive into the massive changes in both housing and commercial property. And stick around, because we're going to uncover the most surprising trend of all and figure out what it all means.
Okay, first up, the overview. Now, if you just glance at the surface, it looks like the market's taking a little breather. But as you're about to see, that surface is hiding some really powerful currents underneath. Here it is, the headline number. Total construction orders are down 3.3% from last year. Now, on its own, you might think, okay, a minor cool down, no big deal. But trust me, that simple number is hiding all the real action. Because that one figure is actually an average of two totally different stories playing out. You've got some sectors that are shrinking and others that are, well, absolutely exploding. The real insight happens when we pull those two apart.
And this brings us right to our first major contrast. You've basically got one source of money holding the market up while another is pulling back. Let's look at the numbers.
And wow, the difference is pretty stark, isn't it? Public sector spending is way up, we're talking almost 20%, driven by big infrastructure projects. But on the flip side, private sector spending is down 9%, as companies get a bit more cautious. This government investment is pretty much the backbone, keeping the market from a much steeper drop. Now let's shift gears and look at the housing market. Again, the top number looks pretty positive, but the real story is in what kind of homes people are actually building, and it shows a huge shift in priorities.
So get this, for the first time in 7 months, overall new housing starts are up, a 3.2% increase. That sounds like good news, right? But the real question we have to ask is, where is that growth actually coming from?
And boom, this chart tells the entire story. Just look at that first bar. Condominium construction is skyrocketing, up an incredible 31.8%. But right next to it, custom-built, owned homes are down over 8%. It's literally a tale of two housing markets.
So why the big shift? Well, it really boils down to two things: money and location. The high cost of land and materials is making that dream of a custom home pretty tough for a lot of people right now. At the exact same time, demand is just surging for condos and rentals in big city hubs like Tokyo and the Kansai region.
You know, this pattern of divergence isn't just happening in housing. We are seeing the exact same dynamic play out in the commercial world, where companies are making very different bets on what the future looks like.
This chart is just wild. Look at that. Construction for retail shops has absolutely exploded, up almost 86%. But at the same time, new offices are down almost 24%, and warehouse construction has basically fallen off a cliff, down over 43%. The contrast is just impossible to ignore.
So what's going on? Well, this retail boom is being fueled by two major things: the big comeback in tourism and a lot of major urban redevelopment projects. Meanwhile, it looks like that huge rush to build massive logistics centers and warehouses has definitely hit the pause button for now. Okay, so we've seen some pretty big swings so far, but I've saved what I think is the most significant, most surprising piece of data for last. This number hints at the biggest long-term shift that's happening across the entire market.
After everything we've looked at, the condo boom, the retail explosion, all that public spending, which part of the market do you think had the single biggest jump? The answer might actually surprise you.
Get this, it's renovations. Orders for repair and renewal work jumped by a massive 33.2% compared to last year. This isn't just a small trend, this is a seismic shift in where the money is going.
And what's so fascinating here is how incredibly balanced this growth is. It's not just one area. Both housing renovations and commercial renovations are booming at almost the exact same incredible pace.
So when we put all of these different puzzle pieces together, the private sector being cautious, the high cost of new builds, and this absolute explosion in renovations, a really clear picture starts to form. We're witnessing a fundamental change in the whole philosophy of the market. And that fundamental change has a name: stock utilization. It's a bit of a technical term, but the idea is simple. With the cost of building brand new things soaring, it just makes more sense to repair, update, and improve the buildings we already have. It's a huge shift from build new to improve what you've got.
This quote really says it all, doesn't it? If there's one major takeaway from all this data, it's this. The entire focus of the market is moving away from just building new things from scratch and toward making better use of what's already there.
And that leaves us with a really big question for the future, right? As this stock utilization trend picks up steam, how is it going to reshape the skylines and neighborhoods of Japan's cities? Are we looking at a future that's defined more by renewal and reinvention rather than just brand new construction? It's definitely something to keep an eye on.
And that's our look at the latest market data. If this breakdown helped you make sense of the big shifts happening in Japan's real estate world, do me a favor and hit that like button. And be sure to subscribe for more explainers just like this one. Thanks for watching.